there everyone, good afternoon and welcome to this edition of Closing Trades. I'm Avan Dabash and with me is Nikunj Dalmia. Well, flip-flop in the markets because it seems like we've given up those morning gains and now those attempts to claw back are evident. But for now, we're holding on to the 17,043 mark. So it's up 1/3%. We've gained close to 100 points from the low point of the trading session, and ditto when it comes to the broader markets as well. Some of the large caps within the banking as well as IT space would be responsible for this. So Infosys makes a mention. HCL Technologies incidentally doing very well. L&T as well as ICICI Bank. That's where you're seeing the traction really pick up. And giving it company as well are a whole host of heavyweights, the likes of Nestle, HDFC Life, Ultratech Cement and ONGC. So those are some of the movers. The IT index has snapped its 7 straight day losing streak, so holding out quite comfortably in the green. And you've got the broader markets which are pretty much mirroring the frontline indices. For the week gone by, given all the choppiness that we've seen, the global headlines, that has really put in pressure on the index, the Nifty Bank as well. So we're down about 2%, and it's been the PSB as well as the auto sectors that have really borne the brunt of the sell-off, and they've shaved off the most. So we're ending the week with close to a 2% cut, and for now around the 17,045 mark in trade. Even within the broader universe, there's pockets of fervor, say like the defensive stocks, etc. But by and large, it continues to remain a pretty quiet day of trade. Thank God it's Friday, Nikunj, but I don't know if market participants are saying the same.
You know, it's just another day.
Yeah.
It's just another day in terms of the market mood and the market temperament, where despite global strength, Indian markets have fallen. Despite a gap up advantage, the bulls were not able to maintain the early morning advantage. With each passing day, okay, now what do we have? China to cut reserve requirement. I think metal stocks will go higher. China to cut reserve requirement ratio by half a bips, which means that the Chinese government wants to get more liquidity back into the system. So there is no universal way in which our central bankers are moving. China is cutting rates, so increasing liquidity. US is doing the reverse. ECB has already moved, and Indian central banks are somewhere in the middle. Now, I will not be surprised if metal stocks now they start inching higher, and the metal index also does well for itself as we unwind the last 1 hour of trade. Yeah, but coming back to the market texture, there's nothing wrong with the global setup today. And yet Indian markets, after a brief early morning flourish, they were not able to really latch on to the early morning gains. And Kunal, while we may look at the green and say, thank God, there's 1 day of green. But on good global days, we are underperforming. On bad global days, we are falling more.
Well, yeah, Nikunj, you are right. Good afternoon. First of all, you're right for most of the part, in the sense that it's been a very tough kind of an intraday move. But my sense is that this is going to be a very tough recovery for the indices. I think the markets are trying to tell us over the last 2 or 3 days that even though we've been broadly holding that 70,000 mark, maybe plus or minus 50, 100 points on the indices, but then the move is going to be very, very gradual and very, very slow and steady for the indices on the way upside. So I think a trader has to position in that manner. Generally when we see a sharp correction or a sharp fall, like an 800, 900 points correction, what we've seen the last 7-8 days, we would ideally have expected a V-shaped recovery, but then this indicates that the bounce is going to be a bit shallow, but the bounce is going to be a bit gradual. But I would still believe that one should play for a bounce rather than looking out for exiting the longs or creating fresh shorts at current levels, at least at current levels, because my sense is that the bounce could probably last for at least another 250, 300 points on the Nifty. That could replicate maybe around 800 to 1000 points on the Bank Nifty.
Vinay Rajani is also with us on the technical, so let's get in his take. And Vinay, as Nikunj was alluding to, despite the kind of support that we're getting from across the globe, you've got the European markets, which are very convincingly in the green. You're not seeing quite as much fervor for our markets. Yes, there are attempts to pull back, but it's with lack of conviction and doesn't seem long-lasting. What are your takes on the Nifty as well as on the Nifty Bank Index, which has recovered from the lows of the day?
Yeah, so thanks for having me on the show. So you are right that a tug of war is going on between bears and bulls for last 2 consecutive sessions, and we have been underperforming the US markets. But as we see the chart, yesterday's candlestick formation was there in Nifty, which is called a long leg doji candlestick pattern, and which is seen after a healthy correction in the market. So this kind of pattern on the candlestick shows that there is an indecision between bulls and bears. But there are good chances that we might see a sharp pullback from here, because we have been seeing that FIs have been heavily short on the index futures, and FIs long to short ratio is also on the oversold side. and put call ratio is placed also at 0.72 level, which is considered to be a very oversold level. So definitely, if not reversal, but pullback is due. And the way the stocks are behaving right now, because whenever this Nifty and Bank Nifty falls, some stocks from some sectors are making highs. Like yes, in last couple of sessions, we have seen PSU sector has been doing good. Now pharma sector has been making highs. So this is happening. Stock specific action on the bullish side is happening. So I am a bit hopeful this rally should, rather I should say, a pullback should sustain. The next resistance for Nifty is at 17,250 odd levels, which happens to be the previous swing low. So 17,250 is the next resistance level. And I believe that 200 to 250 points rise in the Nifty can be there. And Bank Nifty could also see some short covering, which can take it to the next resistance of 40,000 odd levels. So I am bullish from here, at least for the pullback, if not reversal. So traders should cut their short positions and they can initiate a long position with a stop loss of, let's say, 16,900 in the Nifty.
All right, let's put the spotlight then on some of those defense counters. They're also quite a buzz in today's trading session, and that's largely on the back of the news that we've seen the government approving that proposal to buy weapon systems worth more than 70,000 crore rupees. They're going to procure systems from companies like HCL and BEL in order to modernize the Indian military, and this clearly seems to be having a pretty strong effect on some of these defense stocks. You've, Kunal, been an advocate of, defense as a sectoral play. Would you now widen the basket to some more names within the defense space, or just sticking to the usual suspects?
Yeah, the usual ones, HAL, BL, I think they should be top priority ones. So, we always look out for leaders in every sector which lead the charge or lead the rally initially. And then, it's always the mid caps, of course, which tend to give you higher returns. But then the leaders are the ones which would probably even withstand major part of the market correction or the sector correction, whichever way we look at. And then they would be the first ones to even recover as well as come back to the previous highs. Now, for example, HAL over the last 4 or 5 months, the stock has been going through two different kind of trends. Initially, the stock went into a flurry of price uptake, managed to break past about the 2,700 mark, I think in the fag end of the month of December, then started a phase of correction, retraced back towards its 200-day moving average, around the 2,300, 400 levels, and then from there was one of the first defense names to try and come back towards the previous highs and even break past about the 2,700 level. Now, as compared to this, the other stocks like Mazagon Dock, Cochin Shipyard, GRSC, etc., the slew of the names, these stocks have still underperformed and they are still not completed their phase of correction. So purely on that aspect, I would go with the leaders and still stick to HL and BL.
Okay, fair enough. That's the outlook coming in on the entire defense space. Meantime, just want to run you through some of the other stocks that are in the news today. You've got LTIMindtree. Morgan Stanley has upgraded that stock to overweight from an equal weight rating. They've upped the target price as well to close to 5,600 rupees from 4,600 earlier. They're saying that the merged entity is going to be well positioned to become a tier 1 vendor, and there's potential as well for the market cap to double in the next 3 years. You've also got a DLF, the pre-formal launch sales, as we spoke to the management with, has been well over 8,000 crore rupees in just a matter of 3 days. They've also spoken to us saying that they're likely to beat their FY23 pre-sales guidance of 8,000 crore rupees. So looking pretty promising there. That's DLF actually that I'm referring to. So a quick check-in as to how that stock is faring in today's trade. Let's get in a view, Vinay, from you on some of these newsmakers. LTIMindtree, pretty a buzz in today's trading session, and pull up the stock price of a DLF as well, and that's holding out by another 4% at 375. More traction?
Yes. So definitely this IT sector has been performing well in intraday session today. In fact, IT index was making high when market was going down. So looking at the LTI chart, I feel that it's a kind of flag pattern breakout on the daily chart, and stock is already trading above its 200 days moving average, which indicates that the longer time frame, the trend is still intact, and it has been an outperformer within the sector also. So I'm expecting that this previous swing high, which was around 5,000 odd levels, 4950 to 5,000 was the previous swing high. So that range and that band, we can expect stock to go there again. So one should take a bullish view in this particular stock, and I see a strong support around 4630, which should hold for the long trades. And ultimately, stock should extend this particular pullback towards the 4950 to support 5,000 odd levels. As far as this DLF is concerned, a sharp short covering is there, and with a rising volume. So definitely it is a bullish setup. But in last two sessions, we have seen a significant run up. So we can wait for some retracement. We can wait for some correction. So at lower level, definitely one can look for the long trades. I see support around 365, 367 odd levels around which traders can initiate a long position. So overall, I see on the back of some short covering in the market, real estate can do well. And stock like DLF can be bought at dips. And I think 365 to 367 is a nice level to take a fresh entry into it. So yes, I'm bullish on DLF also, but at lower levels, one can initiate a fresh long position.
Let's look at the metal index, almost at the highest point of the day. China loosening up means more demand. China and commodity, they somehow, from a market standpoint, it's itched in everyone's mind that anything good news in China is great news for metal stocks. Anything bad in China is bad news for metal stocks. But that's the way the positioning is. There go that spike is getting more and more evident. Steel, copper, cement, steel, copper, even for that matter, coal, these are the categories which will normally go higher. Cement will not go higher because cement does not get exported, but steel and copper are two categories which will always see the immediate spike, so to speak. Tata Steel, highest point of the day. You got price action which is constructive even in a sale. JSW Steel, JSPL, all that entire commodity complex I think will do rather well. This is happening at a time when crude's gone the other way. Interestingly, metal index is at the highest point of the day. Steel and metal stocks have recovered, whereas crude is refusing to go higher. Let's hear out Gautam Shah on what his picks of the season are, and specifically on some index heavyweights. What is his view?
IT is one basket that will try and hold the market, every time it comes close to support levels.
If I put a gun to your head and say, Gautam bhai, no sell calls. You have to buy a stock. And there's a gun to your head. What would you say? Shoot me, or you'll give me a name?
No, there's always a name, yeah. I think, so I would say L&T. I think capital goods has been our favorite all along. I see it as a 3-year, 5-year story. So these market dips are a great opportunity to buy into capital goods. Look at what Cummins has done, ABB, Siemens, L&T. I think they are great buys from a long-term perspective. The moment the market stabilizes, these stocks will start making new highs once again.
Saying this because there is a gun to your head, or you would have said these names if there was no gun to your head also?
Only because there was a gun to my head.
Okay, I'll remove the gun now. Now tell me the names.
Pretty much the same names, but I would also add the PSU names. I think we like the setup of NTPC, Coal India, Power Grid. I think I love the way these stocks have behaved in these difficult times. There is earnings, there is dividend yield, there is under ownership. And I think they could do really well.
L&T it is, looking at some of those stocks from a long-term standpoint, saying that once the market stabilized, expect new highs on L&T. Let's get in some closing trades from our chartists right here then and find out what they're picking out. Kunal?
So it's Tech Mahindra which I would be bullish on. I've been flagging off buy calls earlier. Now I think at 11:30 approximately on the spot levels looks very attractive for yet another breakout in the stock. So that's a stock which you look to buy.
Okay, there you have it. Tech Mahindra within the IT space. What about you, Vinay?
I would go for metal and mining stocks. So Coal India is also a PSU stocks, we can say, and PSU sector has been outperforming. So Coal India is one of the outperformer and has been holding very well and have been showing resilience in the difficult times. So Coal India can be traded long with a stop loss at, let's say, 220 as a trading call, and 232 should be your target for next 1 or 2 sessions. So I like Coal India for short-term trading on the long side.
Coal India, Tech Mahindra, your top recommendations from our chartists. 17,070 on the index. Quick break. Stay with us. Lots more stock ideas coming up.
Varun Lochab joins us, Head of Institutional Research with HDFC Securities. Varun, good to have you back on ET. Thank you for joining us. Do you think, given the kind of action what we've seen or intervention what we've seen from global central banks, the confidence crisis which had hit the market, that's behind us now, and it's time now to look forward?
I think difficult to say that conclusively, but it looks like that the whole situation might be contained. But typically these things take a bit of time to settle down. Probably another week or 10 days will give us a much better idea. But I think the knee-jerk reaction is largely done. And in any case, even if there were some more sort of pain in the global financial world, we believe the impact of the same on Indian banks or overall corporate India in terms of balance sheet or P&L will be fairly contained and limited. So from that perspective, we are not overly worried on the Indian markets per se.
So then why is there so much of nervousness? Today, for example, we are underperforming. This entire year we've underperformed. I mean, if the problems in the world are far greater than what we have in India, why is Indian market underperforming?
Yeah, so I think that was our call at the start of the year, and we still maintain that even though I think India does not have any big problems per se in terms of the interest rate or inflation or the financial sort of problems which are there right now globally. I think the starting point of valuations and expectations was very high in India, which will keep returns fairly muted for this entire year, and we continue to have that stance even today. So when I say that this issue does not pose a big downside risk, uh, at the same time we are not seeing any big triggers for a large upside either, or a double-digit kind of upside in this calendar year for Indian markets. Given valuations are still high, earning estimates will still get cut. We are building around 12% earning growth for next year, which may also get trimmed by a couple of percentage point, whereas I think consensus is still around 17, 18 times. So there will be earning downgrades. So in that context, I think it's going to be a range-bound market with a downward bias. Our view for the year is returns will be somewhere between +5 to -10%. So greater probability of a negative return in the entire calendar year, than a positive return. But doesn't mean that our base case scenario also doesn't forecast say a 20% decline in indices in the calendar year. So it's going to be a range bound market with a downward bias.
Range-bound market with a downward bias. But Varun, in light of that, then what exactly should be the portfolio approach when it comes to, say, the high beta pocket? Where is it that you believe investors should really be deploying their money?
I think it's going to be extremely bottom up this year. Last year was also overall index returns were not material, but still on a sectoral basis, you had fairly divergent sort of returns. We believe it's going to be a repeat of last year, and perhaps even more nuanced in the sense that within sectors also you have to do a lot of stock picking. Pure sectoral call also may not work. So our clear, preference has been one over, that investment theme over the consumption theme. So we still stick by that. So capital goods, industrials, infrastructure, banks, power, cement. These are some of the sectors where we are overweight. Whereas consumer discretionary, consumer staples, IT, energy, these are certain sectors where we are underweight. Now, again, within that, there are a whole host of stocks which we like. So we continue to, irrespective of market volatility or, concerns on subdued returns in the near term, we continue to find attractive bottom-up opportunities across these spaces. And in fact, some of them have done quite well even this year. If you look at, the capital goods sector, first 3 months has given very good returns in a subdued market. So instead of worrying too much about markets, I think it's time to just buy stocks at the right valuations. What we are also not chasing is growth at any price. So basically, high valuation stocks with low growth also we are completely avoiding for last 2.5 years, given we believe the high interest rate regime will continue for some more time. That's the broad stance.
Share with us then your outlook when it comes to the entire new age tech space. Do you believe that if one were to be selective and really map out the kind of commentary that's coming on the companies, the fact that they are taking cognizance of their profitability and now that they are delivering, that there is select potential within the new age tech space?
So far we have totally avoided the space. So we were fortunate that we were not caught on the wrong side in any of those names. However, you're right that I think some of the business models are good and will continue to be around for years to come. And managements are now finally focusing on profitability. However, I think having said that, still we don't find them, too compelling. A lot of things have to still go right for you to make money on them, even on the next 5-year basis. Even if they were to cut costs, become profitable, and market shares continue to grow. So I think the margin of safety or risk reward is still not particularly attractive. While it is definitely much better and more balanced now than what it was a year back, where a year back it was almost impossible to build out a scenario in which you would make a return on those stocks. But now I think if these some of these companies execute brilliantly over next 5 years, with a tight control on cost, then you can make returns. But we still don't see any big outsized returns, which we are not finding in other parts of the market. So it's just that relative attractiveness versus rest of the market. I would still say in that it's not top quartile.
Okay, that's a view coming in on some of those new age tech companies. In the meantime, I'm wondering if you have any take in specific on TCS. Of course, it was the big headline that we are going to see a change in the top brass, a change of guard, if you will. What do you believe that this would possibly indicate in terms of the long-term strategy for the company? And what do you think it is that will be that the shareholders want to hear from the new management?
I think obviously it was a surprise element. Nobody was kind of geared up for this news. But at the same time, I think the positive is that the new CEO is coming internally, who has spent a lot of time in the system. He knows the company really well, and therefore we expect and what investors would like to hear is consistency of strategy, that there should not be any change in stance in the way the business is being run. I think the business has been run fantastically in the last 10-15 years, and if continuity were to happen, I think that would make investors fairly happy. So we are not overly worried, given the fact that the person replacing seems equally capable. He has worked in the organization for a long time. He has headed different parts of the business, so the understanding would be there. Plus, the rest of these organizations typically have a very strong leadership pipeline, and the fairly large number of leaders are groomed every year for these kind of opportunities. So we are not overly worried. We would like to wait and watch and hear him out, but it definitely came as a surprise, but not something that one should get overly worried about.
All right, Varun, appreciate your time. Thank you for joining us. Let's take a break. When we come back, we'll capture the last half an hour of trade. Trading at the highest point of the day, markets have recovered from the day's low. Bank Nifty has recovered, and the metal index, after the news that China is going to be increasing more liquidity back into the system, is also increasing. HDFC Bank, and finally, the decks are cleared for this mega merger to go through. Ankur, can we say finally the decks are cleared and the order is likely to be uploaded? Because it kept us waiting last time, and it's been 10 days and we're waiting and waiting and waiting and waiting.
Yes, finally, NCLT has approved HDFC and HDFC Bank merger. Remember, last time the judge had reserved the order, and thereby there was a wait of whether or not this merger is going to be approved. Finally, now NCLT has cleared it, and after that, the company has to file an application in ROC. Now, there is a catch here. The lawyer which was representing HDFC Investments had requested judge that they should be given time of 180 days, meaning 6 months for filing to ROC. However, in normal course of scenario, 1 month is given. So that argument still went on, and the lawyer had requested judge that they should be given the time till 30 days for refiling that application. So that may happen side by side, whether or not it is going to be filed in 30 days or 180 days. But for now, the decks are cleared for HDFC and HDFC Bank merger from NCLT, and the court has approved the merger.
very much, Ankur. It's finally a done deal that the merger has been approved. A quick check-in as to how the stock price is reacting. That's HDFC Bank for you. Definitely seeing some sort of a reaction after the news has been declared. And you've also got an HDFC, which is in the green. Rahul Malani as well is joining us from BNP Paribas. Rahul, after a few, roadblocks, finally we've seen the approval come through for HDFC and HDFC Bank's merger. Just wanted to get in your initial thoughts.
So, good afternoon, first of all. So, the news is coming as a positive read-through for the stock. So, basically, see, now we await hearing from the RBI anytime soon on the dispensation. And based on the regulatory dispensation, it would be easier to build the next stage of investment thesis. And so clarity upon the regulatory dispensation becomes a critical in this period to build some conviction here. Because the liability side transition would need some hand-holding here, as management is working through the assumption of grandfathering of the liabilities and the quantum is still quite high. So we must wait as the transition begins to assess the impact on the CASA ratio as well as NIMs, as it is harder to forecast the impact of it today. While at the same time, management has argued on the ROA and ROA metrics as a better measure. It is important to note that there would be an impact on the NIM, but would be offset with the superior cost structure and lower credit cost that is inherent in the housing loan portfolio. So currently, we believe that the merger would lead to dilution in ROA around 10 to 15 basis points in near term, but ROE will still remain way ahead of above the cost of capital, despite some compression in the ROAs. And if you look at the stock, this is trading at 30% discount to its long-term valuation multiple, despite no slowdown in the growth paddles, just due to the merger as the merger was impending. So as far as the risk of the standalone business is concerned, it appears to be quite low given the business performance is holding up well. So we believe strong execution in the coming quarters after the merger could lead to some re-rating in the stock. Because at present, regulatory dispensation will be critical to assess the investment thesis going forward.
All right, Rahul, appreciate your time. Very comprehensively answered. One answer, in a sense, captured all the basic important aspects you need to consider. Now, metal stocks are having a nice little rally today. Kunal, is this beginning of a fresh trend in metals?
Yeah, it could be possible, Nikunj. At least the worst could be behind most of these metal stocks, specifically the likes of Hindalco, JSPL, Tata Steel. I think these are the three names which had gone through a very sharpish kind of a correction, and I believe that the bounce for these stocks could be much more stronger. Apparently, SAIL has been one of the stocks which has been moving completely different in terms of the trajectory for the metal pack. So over the last 1 month, when most of these metal stocks have led, say somewhere closer to 10 odd percent, 10, 15%, SAIL apparently has gained more than, I think, 8-9% from 80 levels to 87, 88, where the stock is trading right now. So I think that's been a standout feature. So which means that it was not that the entire pack was going through a correction, but then I believe that the underperformers, JSPL, Tata Steel, as well as Hindalco, they are the ones which could rally up significantly higher from current levels. So if I have to pick and choose maybe one out of two, I would probably go for Tata Steel at current levels.
One of your erstwhile favorite, Kunal, not erstwhile favorite, but I think it's current favorite, AB Capital, up 4%.
Yes.
Can it make a new high?
Yeah, I think I'm very bullish on the stock. Not from a trading, of course, from a trading perspective, but more from a positional point of view.
Okay, Siddharth Khemka also joins us. Siddharth, the crisis of confidence which was there in the system because of problems with US banks, is that behind us now?
Very good afternoon, Nikunj. I think it's not yet behind us. Definitely, it's a jolt that the entire world got with the start of one bank in US and then spread to few other banks. Now some of the European banks have also joined. And as they say, there is never one cockroach in the kitchen. So we don't know yet. The regulators have come out very strongly saying that things are under control. But I would not like to believe so till we tide over the entire crisis. The Fed is yet to take a stance on its rate hike, whether they have reached the peak rate hike or not. There are liquidity challenges with some of these banks, and there could be a risk to the larger banks as well. So I think right now it's a very cautious view. Very early to say that things could become worse, but even not at a position to say that the crisis is over.
In this market, what are you telling your clients, that they should preserve cash or buy now?
No, so definitely we are not very aggressive in terms of buying. We definitely have a wait and watch. In terms of short-term trading positional views, we are having a sell on bounce kind of a strategy. But from long-term investors, we are very selective in terms of stocks and sectors that we are recommending. We are staying away from some of the global dependent sectors. We are very focused on sectors where earnings growth have been pretty strong, where the commentaries has been pretty strong. Say, for example, banking as a sector where we saw the earnings in Q3 coming out very strongly, and the outlook continues to remain so far pretty stable. Some of the stocks have been underperforming, but that gives an opportunity for investors to come in. The other sector that we like is auto, where we are seeing after almost 1.5 years, the supply chain issues have been resolving. The commodity costs have come down, which is helping improve margins going ahead, and demand has been pretty strong. So that is another sector that we like. Apart from that, some of the other sectors that we have been constructive is the capital goods, infra, defense space.
All right, those are a number of sectors, Siddharth, that you're looking at. What about your outlook then when it comes to the entire metals pack? Because without a doubt, that has seen acute volatility. But do you believe that now it would be a time to nibble into some of the metal stocks, that this could potentially be a steady year ahead?
So, Avan, if you look at metals, I think they are pretty tricky in the sense that, again, they are a globally dependent sector. At one side, China is providing some positive developments, which is supporting the overall strength in the metals. But the larger picture, which is the consumption countries, the US, Europe, where the crisis could become larger and deeper, that could impact demand. So I think the overall view on metals is a neutral right now. We're not very positive, but neither at the current valuations you can become a very negative. So I think some selective nibbling in select metal stocks can be done. But overall, as I said, right now, given the global volatility, given the global uncertainty, and the newer information regarding the banking crisis comes up, I think the stock could remain volatile and hence can be avoidable at the current juncture.
Kunal, 17,300 is where you go in short again. That is what you were indicating to us yesterday.
Yeah, I was indicating that to go long and then wait for 17,300 to be reached.
There is
150 points more.
150 points and you'll go short.
So as of now, I'm enjoying longs.
No, I'm just trying to understand. Let's say Monday morning when you'll come back, you are not going to be going home with long positions.
No, we'll be going with long positions, but we'll be initiating short only at 17,300 or higher.
Okay. Here's the view from Dinsha Arani, and we spoke to him. He's wearing a bright yellow t-shirt. I don't know what it means early in the morning. Maybe a sign of brightness about India. But yeah, I mean, he was of the view that the worst certainly is behind us.
The market's going to be in a tight band, and a correction will be an opportunity to pick up your stocks where you're comfortable with, and a real rally, if there is one, you may just shave off a bit and then come back again. And because there's enough opportunity in this market actually, and that's what we believe ourselves to be stock pickers. So we waiting for the right stocks and the right price. And
have you shopped a lot in this market decline? Because a lot of news per se will not have impact on India, if at all. If I focus on crude, so what's happening in the world right now, A, it's not going to have a contagion. B, crude and commodity prices have come down, which on margin is great news for us.
So actually, Nikunj, the problem that US went through, the banks went through, it was quite ironical, right? Because 2007-8 was brought on by aggressive lending to the housing sector, which actually the bubble burst and things went downhill for them. But in this case, it was because of buying government bonds, right? So it was obvious there's not a crisis we're talking about. At the most, a Fed could have very well come back and said that, okay, guys, I will lend you the money on the face value of the bonds as such, because he's the guy who's issuing it, right? So, and that actually happened, and that's why the world is back to where it was earlier. And actually, you're right, because we did realize this, and frankly, I mean, we never panicked. We did pick out a few names. I mean, not names, rather we didn't add any new names, by the way. We've been in search for a few names, but we did add to our existing positions and never cashed out. And in fact, we were in cash to an extent, and we started deploying that cash to that much extent.
So, we're never happy with just the view. We want the names as well. What is it that you bought and sold?
Aisha, no, I won't be. I won't be telling you the names per se, but I'll definitely disclose the industry. So basically, the panic was in banks, nothing to do with US, and certainly you saw a lot of correction in the banks in India per se. So obviously we love our private sector banks, and so we picked up a few names there. In the consumer space, there was a bit of a upheaval because rural seemed to be not picking up, urban seems to be on a downhill. So that's why one sees a bit of a turmoil, which we agree with also to an extent, but we don't think that's going to be a lasting effect. So there we being a bit cautious, but we're picking up wherever we see value coming in as such. So.
Okay, that's Dinsha Irani's view. I just want to pick up select names that are perking up in trade. Zomato, for instance, pull up the likes of a Paytm. PB FinTech is still looking a little bit quiet. Just want to check where Nykaa is at currently, 3% on that stock. Getting a view then on the charts. Kunal, just basis the limited data, anything that's standing out?
So I think Policy Bazaar is something which I've been bullish on. I think I've been recommending this time and again. Looks very attractive. Even in the last 2-3 weeks, the stock has been more sideways, and every time when the market stabilizes, the stock gets into a strong recovery phase. Zomato, on the other hand, has been building a good base at the 50 mark. So I think if I'm not wrong, the last correction last month, the stock bottomed out close to this 50 levels. So keeping that as a support or as a stop loss, I think a positional trader could look to initiate a buy. Paytm, I would be bullish, but then I would probably wait out for a break above that 700 mark. So what the stock has been doing is it's been shifting the base from a level which was sub 600 to now almost at 600 mark currently. So I believe that it's better that you could buy on confirmation of a breakout, and that could happen about 700 for Paytm.
Interesting movers for the week gone by. Pull up the 1 week chart of an Adani Green. That stock has managed to gain about 19.5%. There's been a MedPlus Health as well that's seen strong traction at about 792. Thereabouts is what it hit with a 14% gain. BPCL as well has had a pretty strong run up this entire week. Adani Transmission, and then of course you've had Z Entertainment. While the gains may have fizzled out today, for the week gone by it's gained about 7%, and then DLF. Given those extraordinary numbers that the management, that the company has managed to clock in, it's been a 7% gain. Vinay, your view on any of these stocks, DLF, Z Entertainment, or even a MedPlus Health?
Yeah, so BPCL you were talking about, like it has been doing good for last 3 sessions. So that stock I like positionally. No doubt for last 2-3 sessions it has been rising sharply with the volume. So any intraday dip or 1 or 2 days correction can be considered as a buying opportunity. So I'm bullish on BPCL. And yes, Z is also looks like a reversal case. Z yesterday's move was quite significant and convincing. So I think selling climax was there yesterday, and after that it has started turning the trend. So again, follow buying is there. So I believe that this could be a reversal for Z Entertainment, and 208 is a current market price. I think keeping a stop loss of 200, one can remain long in the stock, and on the upside I see a resistance around 225 in the short term. So BPCL and Z Entertainment looks stronger on the charts and can give good returns in the short term trading.
HCL is coming out of this slumber. Z is coming out of this slumber. Siddharth Khemka, is Z a buy now, given that a lot of the problems which happened because of the bank issue, what happened at the NCLT case is all sorted now?
So I think that definitely if these developments happen and it is not yet out, the news is out that Z would be paying off and doing a settlement with IndusInd. So I think that's a positive development. The market is eagerly awaiting details with the merger with Sony, which will be a big trigger going forward, because the entire story now hinges with the change in management, the Sony management coming in, bringing in the much needed transparency, corporate governance, and the long-term growth. So I think if these issues are getting resolved, definitely it makes sense to have a look at Z, having gone through all the pain of the insolvency proceedings and now getting out of it. I think definitely it makes sense to have a look at Z at these current levels.
Meantime, on the flip side, then, it's not been a great week for Samvardhan Motherson. A double-digit cut is what you've seen. PNB Housing has also had it rough, lost out about 15.5% thereabouts. IndusInd Bank for the week gone by, it's been down about 10% at about 1,021. There is where the stock is at. And there's been an IRB Infra as well that's had a bit of a choppy week gone by. Kunal, advocate of IndusInd Bank, what's the view on the charts after what's taken place, and maybe even a Samvardhan Motherson, nearly a 20% gash?
Yeah, so I'll start off with IndusInd Bank because I think that stock has somehow lost its sheen in the last 1 week or so. It was doing pretty okay about that 1150 mark, 1180, I think just about some 6-7 days back when the markets were also perched higher. But then I think, some kind of news flow which has dented the stock over the near term. But I would still believe that the broadened charts are very bullish for IndusInd Bank. So maybe this could be a phase where the stock may underperform the other peers like ICICI and HDFC Bank from a very near-term relative point of view. But then I would probably expect the stock to also recover and come back in line pretty soon, possibly in the next 1 to 2 months. For Samvardhan Motherson, the only concern is that the stock was, as it is, into a very strong struggling phase. Now, you look at the charts relatively for the stock over last 2 years, it was beaten down quite significantly, more than 50% correction for the stock in the last 1 year, 1.5 odd year. So it doesn't come as a surprise that even in this last leg of market correction that the stock has corrected very sharply. So I would generally avoid the stock at current levels and would not participate into bottom fishing at current zone.
Okay, fair enough. That's the view coming in on IndusInd Bank as well as Samvardhan Motherson. Let's get in BTST calls as well from our chartists. And Kunal, your trade?
So 2 buy calls. The first one is Bector Foods. The stock is making a very strong comeback. Back again about that 540 plus mark. So would suggest a buy with 600 as a near-term target. Stop loss at 525. And the second will be buy in Tech Mahindra. Again bullish on most of these key IT names, specifically Tech Mahindra, expecting a breakout about 1050 plus. Targets of 1200. Stop loss at 1100.
All right, Tech Mahindra as well as Mrs. Bector Foods. What about you, Vinay? Let's get in your BTST trades.
First, I would like to pick the mid-cap IT stock Zensar Technology, which is giving a breakout from the flat pattern on the daily chart, and it has performed very well in the last month. And after some healthy correction, it is resuming its uptrend. So I would go with the Zensar Technology, which is placed around 277. Stop loss can be kept at 270 and 290 can be target. This is not purely BTST, but this can be taken for 1 week view. And overall, I am bullish on this particular stock. But purely for BTST, one can look for the stock like a Steel Authority of India SAIL, which is PSU also and metal also, and both sectors are performing well. So I would go with this SAIL, which is placed at 88.80. 86.50 should be the stop loss, and we can expect a target of 91.50 to 9200. So SAIL can be purely a BTST call, while you can positionally go long in the Zensar Technology.
Okay. SAIL 4% higher, Tata Steel 3% higher. It is a good day for across the board metal stocks. By the way, Reliance has cracked completely. Siddharth Khemka, I'm yet to hear a bearish view on Reliance. Everybody's a bull on Reliance, but that is not helping the stock. It is at a 52-week low. Why is that?
Yeah, I think even we have been positive on Reliance for quite some time, although the stock is not performing in line with the expectation. The core business that had seen some recovery is now again, I think, under pressure. The chemicals, the oil and gas business, which was supposed to benefit out of the gas price revision, that is something positive. The challenge that we are seeing is in the newer age businesses which were driving growth earlier. So you are having a slower growth in the telecom business, which is impacting sentiments, as well as in the retail sector. We have seen across the sector, be it Trend, be it ABFRL, be it DMart, or be it Reliance Retail. Growth has come down, especially in the December quarter, which was supposed to be a big quarter because of the festive season, and that is something worrisome for if you look at the larger picture for not only for the retail sector, but if the consumption demand continues to remain weak, I think that would be a big negative for overall earnings scenario. So having said that, as I said, coming back to Reliance, I think the newer packages that they have started, especially recently, that is something that could again drive growth for Reliance in the telecom business. The summer season could improve some of the growth, especially with the launch of the new Cola that is hitting up the beverages market in India. We are getting a new large player entry after a very long time. That could be exciting for Reliance and the core business to continue to do well. So overall, I think at this valuation, we would still be positive. Although, as I said, the stock has not performing in line with our expectation, but the outlook continues to remain positive.
Meantime, just pull up the Nifty Bank Index because that recovery is evident. You've got some of the heavyweights, a Kotak Bank, for instance, that's up about 2%. ICICI Bank, HDFC Bank, Bandhan Bank, something even like a South Indian bank is doing quite well. Kunal, your view on what's taking place with the Nifty Bank, this pullback?
Yeah, I think a slew of short covering which started off, then writing off from the major put options on the 39,000 strike for the index. In fact, throughout the day, even at a point when the Bank Nifty was trading below the 39,000 mark, that was I think the first half an hour, first couple of hours for the markets today, there was a huge amount of writing at the put options, and I think that acted as a support as well as a strong support for the index from where we moved up higher. Now individually as well, even if you look at the last couple of hours of performance, the likes of SBI, ICICI Bank, HDFC Bank, they were still holding their ground when the markets were, when the Bank Nifty was correcting. So I would believe that it's a large cap names which could make a strong comeback. I would look out for HDFC Bank, ICICI Bank and SBI in this round of...
even buys at current levels?
Yeah,
for some of
in this round of performance, I think SBI, ICICI Bank and HDFC Bank should outperform.
JK Paper, Vinay, I just wanted to get in a view purely because the stock has shot up nearly 12%. APL Apollo Tubes as well as KPIT Tech. There's some smart movers on the Nifty 500. Just wondering if they have legs to go up further.
Has been performing very well and it is trading at near its 52-week high. So primary setup of the KPIT technology is quite convincing. So on the all time frames like short term, medium term, long term, KPIT looks better. JK Paper more like a news driven movement which has come. So till yesterday there was nothing on the chart and today it is moving up with significant volume. So zigzag kind of pattern, I would not go for the JK Paper as of now as far as the trading is concerned. But KPIT technology has been performing well and I would stick to this kind of setups on the charts.
All right, let's wind down the markets then. Just about a minute and a half to go. And it's been a sort of choppy day of trade. But I guess after all the give and take, we have managed to scale back. And I think kudos really to the Nifty Bank Index that has managed to pull up the overall index above the 17,100 mark. Real estate as well has gained traction. Metals, the Nifty Bank, as I said, along with IT. On the flip side, media sits it out. Pharma as well is in the red. Top movers then in today's trading session. HCL Tech has really stood out. UPL is in the green. Hindalco's had a good run. Ultratech Cement, Nestle pulls back. Kotak Bank, Grasim, the HDFC Twins, Adani Enterprises. Those are some of the smart movers. Eicher Motors, Maruti, Sun Pharma, ITC. They're in the limelight on the downside. Select newsmakers then, HDFC and HDFC Bank definitely on the back of the NCLT approval on the merger between the two banks, between the two entities. It's a change of guard at TCS. You've got the CEO designate K. Kriti Vasan, who will now be taking over from Rajesh Gopinathan, the current CEO. Defense stocks in the limelight after the government has agreed for a proposal to buy weapon systems worth more than 70,000 crore rupees. So that's kept those stocks abuzz. Jubilant Food, Macquarie has maintained and underperformed. They slashed the target price as well on this stock. Varun Beverages, CLSA says an outperform with 1,500 rupee target price on the stock. So that stock is a buzz. You've got Voltas, the subsidiary has bagged 1770 crore worth of orders. Glenmark as well as announced an interim dividend. Something like a Hindustan Zinc as well as mulling a fourth interim dividend for FY23. Within the broader markets, JK Paper rallies, APL Apollo, Indocount, Bank of India, something like an Adani Green, Adani Transmission, all in the green. So those are some of the smart movers. And for the week gone by, we've lost out about 2% on the frontline indices. Wrapping it up on this edition of the show. Thanks.